Hello, and welcome back to Sigma Investing Hub. Today, we're delving into the exciting world of investing, and our focus is on Canopy Growth Corporation's CGC share price. We'll be covering technical analysis, future targets, chart patterns, and most importantly, how to protect your investments with stop-loss orders. So, let's dive in. First, let's roll up our sleeves and get into some technical analysis. Here's a chart displaying CGC's recent price movements. As of the latest market close, CGC stock is trading at 76 cents per share. As you can see, Canopy Growth stock has been quite dynamic lately. It's essential to understand these movements to make informed investment decisions. For those new to technical analysis, let me break down a few key elements on this chart. Green candles indicate days when the price closed higher than the open, while red candles represent the opposite. In recent weeks, we've witnessed a mix of bullish and bearish movements. The stock has shown both upward momentum and moments of correction. Now, let's shift our focus to future targets. Many investors are curious about where CGC might be heading. Take a look at this graphic, which outlines some potential price targets. Analysts are divided, but the consensus suggests that if the current trends continue, CGC could potentially reach short-term resistance levels in the range of $20 to $25. Please remember that these targets are not guarantees. The stock market is influenced by various factors, and outcomes can change. These targets serve as reference points to watch as you assess your investments. Now, let's talk chart patterns. They offer valuable insights into a stock's future direction. Here's a chart showing some recent chart patterns observed in CGC's price action. One pattern to note is the recent consolidation phase. This is where the stock takes a pause, moving sideways before potentially resuming its trend. Additionally, we've seen instances of higher highs and higher lows, which are characteristics of an uptrend. However, it's essential to recognize that chart patterns can change quickly. Now, let's discuss an essential risk management tool, the stop-loss order. A stop-loss order is a preset price level at which you decide to sell your shares automatically. It's a crucial tool to protect your investments from significant losses. Most trading platforms allow you to set stop-loss orders easily. Just enter your desired price level, and the platform will execute the sale if the stock reaches that price, limiting your potential losses. Using stop-loss orders is a disciplined way to manage risk in your investments. It ensures that even if the stock experiences